The Public Accounts Committee, or PAC, said 8.5 million COVID-19 vaccine doses in the Health Ministry's inventory worth 505 million ringgit have expired as of June 1st. According to a report by the PAC, the ministry had procured the vaccines based on projected demand, but a drop in demand for vaccination, delays in receiving vaccine supplies and donations from foreign countries resulted in an excess. The report also noted that due to the global shortage of medical equipment at the time, the country had to undertake emergency procurement of vaccines, ventilators and other essential supplies to tackle the COVID-19 pandemic. This led to some procurement decisions being conducted via WhatsApp. In the case of the 104 malfunctioning ventilator units, the PAC said there was no written agreement between MOH and Pharmaniaga Logistics, which supplied the equipment. This means that no party can be held accountable for this. There was also a discrepancy regarding the existence of warranties for all the 136 ventilators supplied by the company. A day prior to its cut-off point to submit its regularisation plan, PN17 outfit KNM Group has submitted an application to seek the extension of the deadline by a year. According to its burst filing, the Oil and Gas Engineering Group is hoping to get its deadline moved to October 30th, 2024. It said it would announce the outcome of its application once it is notified of Bursa Securities' decision. KNM triggered PN17 criteria on October 31st last year, after its auditor highlighted a material uncertainty related to its ability to continue as a going concern in its audited financial statements for the period ended June 30th, 2022, with shareholders' equity on a consolidated basis less than 50% of its share capital. KNM had intended to sell its German-based machinery and equipment manufacturer Borsig to resolve its liquidity issues. However, the deal failed to materialize, leading the cash-strapped outfit to subsequently default on 3 credit facilities. KNM shares were unchanged at 10.5 cents, valuing it at 405.51 million ringgit. The government will remove subsidies and price controls on chicken starting this Wednesday, though state assistance and ceiling prices will remain status quo for chicken eggs. This is in line with Putrajaya's approach of retargeting subsidies in phases. Agriculture and Food Security Minister Datuk Sri Mohammed Sabu said ending broad-based subsidies for chicken would reduce leakages of subsidies and exclude foreign nationals and high-income groups from enjoying them. According to the minister, the government has borne 3.8 billion ringgit for chicken and egg subsidies since February this year. In a note, MITF research said the move should not cause the market price of chicken to increase substantially. It noted that chicken prices in most states are now below retail price ceilings, except for Pahang and Selangor, and believes the government will be closely monitoring the situation. It said this is a positive development for chicken producers like Leong Hap International, though it does not expect any impact from the development on the upcoming third quarter results. PNB, the EPF and KWAP are co-investing in Osram Opto Semiconductors manufacturing facility in the Kulim High-Tech Park in Kedah. According to a joint statement, the co-investors have signed a sale and leaseback agreement valued at 2 billion ringgit with a domestic subsidiary of AMS Osram, an Austria-based company known for its expertise in intelligent sensors and emitters. The transaction is expected to conclude this coming December. PNB, the EPF and KWAP will each have an equal ownership stake of 33.3%. The investment is for a 10-year period with a clear exit strategy. The statement said the deal offers an opportunities for the entities to invest in a high-quality and high-specification industrial real asset in Malaysia, which provides competitive returns. It added that the injection of capital would enable AMS Osram to establish the world's first fully automated 8-inch LED and micro-LED manufacturing facility. The facility is expected to foster the development of an ecosystem to support high-value added activities, such as semiconductor fabrication. US private equity firm KKR has reportedly signed an agreement to invest $400 million or 1.9 billion ringgit in OMS Group. According to a Reuters report, the transaction was announced in a joint statement, but additional details were not disclosed. It noted that the deal marks KKR's latest investment in digital infrastructure in the Southeast Asian region. According to its website, OMS has done subsea cable installation and maintenance projects for the past 30 years and has offices in Malaysia, Singapore and Indonesia. The company will utilize KKR's investment to accelerate growth, including expanding fleet size and capabilities and investing in cable landing stations and subsea cable routes. It had reportedly been weighing a listing on Bursa Malaysia this year in a deal that could have helped it raise up to $300 million. However, the plan is said to have been shelved due to unfavorable market conditions and would be revisited if and when the broader initial public offering market improves.